We've got inflation, big time. No matter what the Fed says, we've got rising wages. What's next? Rising interest rates? Oh boy, what's the impact of that? Lots to talk about today. Sit back, let's go. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, I am a practicing financial advisor. What you see and hear here, I do apply to our clients' portfolios. So please do consider subscribing and smashing that like button on today's video. So, lots to talk about. Rising inflation. Out of control inflation, despite what the Fed says. Now, we've got rising wages as well. The pool's getting smaller, wages going higher. Not a good thing because that affects what? Earnings. All right. So what's the next move on the Fed? TBD. So lots to talk about. Today, we're going to go through the cycles. Still in cycle 2 for now. Go to the big charts. What do those signals look like? What keeps me up at night? Game plan going forward. Let's go to the big charts. All right, so as always, we start with our cycles. Now, we have been in cycle 2 since November of last year. Not going to get into a lot of details. Link up here on details on cycle 2, but growth accelerates, inflation accelerates, right? We've been talking about this for quite some time, not just in the last week like a lot of other folks. Now, starting to see some cracks. Question is, where do we go? Cycle 3 or 4 to be determined, but we expect to see that sometime in the next quarter. So let's go to the charts now. Okay, so first up, we're going to talk about the monthly chart, which is our long-term trend line, okay? Clearly, and I could go back a lot further, but we're still very much in an upwardly trend. Let's see what happens this week. Little bit of weakness on relative strength, but still very much positive at this point. All right, next up, weekly chart. What do I see here? We're going back to 2018. You can see that trend line right there. Very much distinctive, big time breakout above it, but we are seeing some weakness here. So the question is, what's going to happen? Now, this is Thursday afternoon. I'm recording this. You're seeing relative strength on the weekly chart breakdown. Haven't seen that for a long time. Same thing down here. That is momentum. So again, 3 months or less trend. Today, it is still positive. We're going to watch this. If it does go negative, then that will change our overall allocation. All right, first up, we're taking a look at the daily chart. So we've got long-term view, our trend, and then we have our daily, which is our trading zone. So what I mean by that, whether it's stocks, ETFs, or the overall market. So when I take a look, here's your trend line. You can see that going back to 18. We're at the top of it, have not hit it recently. Here's the bottom end of your trend line. Well, yesterday we dropped through it. This morning we came up, but doing this in the afternoon on Thursday, we have come down with some weakness here in the afternoon and still below the trend line and this box we've been trading in for quite some time. So the other thing I look at here overall, of course, is the volatility index, VIX. I always talk about that. 20 to 25 is choppy. You can still trade below 20. We're good. Below 15, we're really good. 25 to 30, you really got to be careful. And we're not investing above 30. So we did end up above 25 yesterday. We're just below it right now. I want to see, right? That's a big indicator for me short term. I didn't add any what I'll call high beta equities today. Added an inflation asset I'll talk about during our sector spotlight. But when I look at the chart, you can't not say that it's not negative. So it's negative, but my signals this morning did show some positive sign for some potential upside. So we'll look to see that, capture us on Facebook, and you'll be able to get automatic updates on that as we go forward. So the next thing is when I talk about the VIX, I'll show you a deeper picture. Here's your weekly view, and you can see each of these trends, right? And boy, we hit the top of it yesterday on the weekly, bounced off it. So that again is another good sign. Okay. From there, obviously, tech has been getting pounded. It's just not working for the last couple months. You can see that really have come over here. Little bounce today. We'll see what happens. But overall, here's my biggest concern. My device is in the way. There we go. So my biggest concern right now is this is NASDAQ relative to the S&P on a performance. So you can see how well the NASDAQ has performed relative to the S&P, right? It's been fantastic. We broke above a 1999 trend line, but guess what? We have now fallen below again. So that is really something I'm going to watch. Is this the rotation some folks are talking about? We'll see. Not there yet. Talk about it in Sector Spotlight, which is next. Let's go. All right, Sector Spotlight. I'm going to start here for the most important reason. The dollar, okay? We've been talking about this. Our cycle 2 call came back in November, okay? And the dollar has been crashing, which happens in cycle 2. Also because of the Fed. We'll get into that when I talk about what keeps me up at night. So when the dollar goes down, inflation goes up. Look at commodities down here. Up 95% from the bottom, did not get in then. Again, we got in the November timeframe and still feel that we have some room to run. So biggest holding is in the oil. You can do oil companies, price of oil, master limited partnerships, individual names, etc. So a lot of good opportunity still in the overall inflation space is what I'm calling it. So with the pullback, I was looking to find something, add some more to those inflation assets. And here's materials. Had a nice little pullback of 5%. You can see that run up. Have not been able to get in. Probably should have gotten in there. Did not. I was in other places at that time. But I felt this was a good entry point for us to go in, even if it's just for the short term. And again, continuing with that inflation trade. So, all right, next up, banking sector. Another sector that has done really well. One of our top holdings right now. Why? So dollar down, inflation up. Who else benefits here? The Treasury. The Treasury's been going up. Now, you don't benefit because the price of Treasuries go down, but banks have done very well in this cycle, as you can see. It's gone straight up. A little bit of a pullback, having a nice bump today, okay? Again, this is one of our top holdings. We've got some indexes here, some individual names. Continue to like the banking sector as we go forward. So haven't talked about this, but international, this is the EFA index. Remember, I show indexes. You can't invest in these. You're going to have to look up, or you, of course, give us a call. But international sector as a whole has done very well. And you can see here as it's gone up. Now, this big pullback recently, it really has been an American thing. Now, we've had a little bit of a pullback here in international, but what do I like about this? When you see what happens here, okay, it comes down. That's a lower high, lower high, lower high. So each of the highs, each of the lowers are getting higher from a technical standpoint. That's a good thing. We do like international as we go forward. We're fully allocated here in international. We also have some individual countries, Germany, Australia, a couple others, and we're out of those emerging markets, Japan and China. Okay, next one. This is on a short leash. Have not had a lot of success with this so far. Is semiconductors. You would think this would do better. The chip industry with all the shortage. Okay, had a big morning, has come back quite a bit today. Again, short leash, part of tech as a whole, has not done well. Obviously, it did hold support. That's one of the reasons I've kept it, but we'll see what happens this week. Next up, what keeps me up at night? All right, so I always talk about not much keeps me up, but lately I gotta tell you. So what's the biggest thing, right, that's been going on? Now, inflation, right? And you see our man Chairman Powell, image here from our friends at Hedgeye, right? What inflation? My gosh, we've been talking about this forever. Okay, so let's take a look. Lumber prices, how big is that right now, right? So last year, here's an image, right? $50,000 of lumber would build 10.5 single-family units a year ago. How about 2.5 this year? Let's say that's a lot of inflation, right? Home prices surged. So again, these are all parts of what we're seeing in inflation, okay? Now the gas, obviously a lot of people have heard of what happened here with that hack. That's hurt things in general. Prices are soaring. Again, another reason why we like our oil sector right now. Consumers feeling the pinch. Grocery bills going up, of course, right? Wheat, corn, anything under that commodity box, right? Anything in the agriculture space is going up. And we got a huge number yesterday. Biggest number since 2008 in CPI. Today, biggest number in PPI, Producer Price Index. Prices are going up. What's the impact of that? We're going to talk about that in a second. So last week, the big story was unemployment, right? Some called it the most disappointing report ever. Yeah, it was ugly because of the projection, right? Can't see this, of course, such a small font, but this shows you every single data point going over the last year. Year over year is actually up 10%, okay? So to put things in perspective. So the big thing, what's holding us back? We now have an 8 million gap, 8 million jobs that are open right now, which is the highest even before the pandemic, okay? Surging. Now, a lot of people are staying at home still, parents with kids, and then of course the unemployment issue where people are getting an extra $300. This is something I saw this week. So in New York, payment is $33,540. So a lot of people aren't going back. I mean, when you see what's happening out there, so this is driving wages higher. You have less employees that are willing to work. That's driving everything up. That's not a good thing for what? Earnings for companies. And you look here, here's a local sub and steak shop I go to, $300 bonus for summer help. Okay, we're down at the beach. A lot of people need summer help down here. So, what else keeps me up at night? What bubble, right? When you see what's going on, there's been a lot of talk this week, some very smart people. There was really all these articles here. I'll have links below. Stanley Druckenmiller put together an op-ed in the Wall Street Journal. Fantastic. I can't find any period of history where monetary and fiscal policy were this out of step with economic circumstances. The Fed is so behind the curve again. Okay, so what happens next is what, right? So you've got rising inflation, rising wages, which is going to affect earnings. What do they do to stop that? Raise interest rates, right? Excuse me. Will they do that? Think of the impact of the market. This market is so sucked up on monetary fiscal policy, pumping liquidity out there. Think about what would happen if it stopped, okay? So the other thing behind the scenes I'll talk about overall in the market, I used to show this new highs minus new lows, okay, in the NYSE, the broad market. We had a great move, right? So it was getting stronger. It was being pushed up with more activity, but look at the last couple days. How about today, Thursday, 20 new highs minus new lows. That is not a good sign. We'll continue to watch that. This is showing companies with the 50-day moving average. So we have the S&P, NASDAQ, mid cap and small caps. All of them are breaking down. So again, these are the kind of things that I'm looking at right now. So what do we do next, right? What's our game plan? Always be patient and smart, right? Sell your dogs. That's what I did this week. I sold some dogs, raised some cash. Okay, I talked about one little thing I put together. Trim your winners. Be smart here. This is a good time to raise some cash, volatility where it is. Now, if volatility comes down, that's a different thing. That's why I say watch volume and volatility, cycle changes, follow us on Facebook, other social media. We will keep you up to date. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.